What's up, everyone? Tony here again. Wanted to bring you another episode. Apologies for missing on Friday. Just got a little bit tied up with a couple of things, but there's been quite a few events, as you can imagine. It's been kind of crazy the last couple of days in the markets. So, without sorry for my squeaky chair here. Without further ado, let's go into the coronavirus and how that's kind of progressing. So his website is back up, and they've added a couple cool little things. So thanks to whoever it is, buy me a coffee. I might. So total infections were at 181,532. Excuse me here. Let me see if I can. Okay, I think, yeah, there we go. Okay, so 7,000 deaths overall, 78,381 total recovered, 96,000 current active cases. The mortality rate seems to have gone up. So it's currently at just under 4%, which is a lot. I find it strange that mainland China is at that 80,000 mark, gone up to 81,032. Seems strange. So hopefully they're doing whatever procedures they're doing of locking everybody down and quarantining is the reason why that number hasn't really changed. But there are some people who think the numbers are being smoothed over. I don't know if that's the case or not. So hopefully it's not. Hopefully they really have restrained it. I really hope that's the case. And you can see every other country has been massively going up. So Italy is almost at 30,000, Iran at almost 15,000, Spain 9,500, Korea 8,200, Germany 7,200, France 6,600. I mean, it's up there. The U.S. 42, almost 4,300. I mean, it's everywhere. UK, Netherlands. It's out there. And deaths, we have mainland China 3,200, Italy 2,100. So yeah, so Italy's death rate compared to China is way higher. Huh. That's interesting. Hopefully they can figure that out. Iran 853, Spain 342, France 148, US 76. Let's dive into the US. Korea 75. Wow. And let's see. Let's break it down by. So I think the data is just still coming in, so it's not going to be reflective. For example, mortality rate is higher than the average recovery rate in the U.S. Seems the numbers have yet to come in. But you can see that New York has basically taken the lead. Not a lead anybody wants to take, but now New York's in the lead with 964 cases, which kind of makes sense why the UFC has they've changed locations. I don't even know if they're going to have it in the States, to be honest with you. I don't know what the solution would be there, but it might be more empty stadium kind of things. So we have New York and New York, followed by Washington, California, Jersey, Massachusetts, Florida, Colorado. I mean, there are quite a few, but definitely the state with the highest death rate here is Washington with 42. New York follows well, not that closely, with 8. California 6, Florida 5. It's just becoming more and more. So hopefully we can figure out a way to get that contained and hopefully eradicated. I mean, it's a long shot to eradicate it, but you never know. So let's move on to the market. So the market, so yesterday the Fed had an emergency meeting and they decided to cut the interest rates to nearly zero. I don't even know what to think about that. That to me is, and they're gonna. I think it's 400 billion or 700 billion to uh, to buy treasuries, I believe. Um, let's see. I think it was this article here. Not this one. So they cut the rate to 0 to 0.25%. So my only fear there is they basically pulled all the stops and basically not overreacted, but they could have waited 3 days to have their normal meeting. They jumped the gun, and now maybe even to do something positive, what that shows is that it shows weakness. It shows that the Fed is scared, so they couldn't even wait until Wednesday to have that meeting and announce the rates. They had to do it kind of like suddenly, which is probably why the stock market reacted so poorly to it. Uh, and then also, so in the future, it's going to be hard because usually you lower interest rates to kind of, you kind of like ease things as time goes on. So they just basically went all in, or mostly all in. And I'm kind of, I don't know. I don't know what to think about that. So it doesn't seem to have been the wisest decision, but it's the Fed, and I believe, I would hope that they have the right information. So I wanted to see if that 500 million fresh funding, it was a couple billion. Wish I had it right here, but anyways, moving on. So you can see that the Dow plunges 3,000 points. I mean, this morning actually I was a bit frustrated with Schwab. They couldn't, even the charts sucked. It couldn't even refresh. I couldn't even scroll the chart. It really was a poor experience. So I don't know if that was on purpose. I don't know if that was just overwhelming demand, but couldn't make a move when I wanted to make a move. So that was a little frustrating. So I'm looking at some other options for brokerages. So we'll see how that goes. Now, granted, these are just, this doesn't happen every day. These are things that happen once every so often. So, but yeah, it frustrated me enough to make the move because when when these things do happen, you want to be able to act. So I was a little frustrated there today. So, but yeah. So long story short, we can see that the Dow down nearly 13% currently, S&P 500 12%, Nasdaq 12.3. Gold down 0.8, oil down nearly 10%. It's at $28. We haven't seen oil. Let me see the charts real quick. Yeah. We haven't seen oil. Let me go into a weekly here. That's can't be right. Am I looking at the right thing? Light blue. Okay. All right, here we go. I don't know what I pulled up there. So the last time we saw this was 2015. Actually, it wasn't that crazy of a long time ago. And so, yeah, so before that, it was around this time. So 2003 was the last time we saw oil, besides 2015, which briefly hit there a couple times, I think. It was maybe a couple weeks in 2016. Before that, it was 2003. So, yeah, the oil wars and all this fear, all this stuff is just like this 1-2 punch: coronavirus and oil wars. Now, to be fair, the market has been overextended for a long time. So maybe, it's like what came first, the chicken or the egg? So you can put blame wherever you want. But at the end of the day, it's just reality is most people want for the market to be healthy. It's just the best thing for everyone. Everybody, everybody's 401k, everybody's IRA, Roth IRA. Everybody is able to prosper. So yeah, the sooner the better that we can get over this hump. But that's quite a hump. So far we have and I'll go back to FinViz because I wanted to see what was there. But we can see that we had, if we zoom into the last couple of weeks, we had a sort of high in February 17th. So from February 17th's high of 54 to, let's even go, well, last week's, which is $27. Let's say 28.15. Let's go not so harsh. That's 48% drop. That's a 48% move right there. That's insane. So you can see that things are doomy and gloomy. So let's go back to Market Watch. Is there anything I missed? No, not really. So close that. So FinViz, again, just a few little droplets of green, probably biotech and medical companies. And yep, 100% change. Medical company called OpGen. Blue Apron, huh? Well, that makes sense because they ship. um, so yeah, basically anything that's going to provide. So Amazon should be killing it, I would expect. Um, this is Trevi Therapeutics, biotech, up 48%. Cigarettes, Vapotherm, huh, 41%. Gaming activities, that kind of makes sense. So basically anything that you can do from home, any kind of service that will ship to you, that's going to do well, it appears. Brick and mortar is going to be hurting. So we have to see what happens there. Major news, Apple down 12. This is Boeing down another 24%. Wow. Yeah, all airline companies are struggling. I think they were asking for a bailout. Let me see if Market Watch has that. They were looking for a $50 billion, I believe it was, bailout. Let's see. I would assume that this would be, let's see if, I believe it might be on Boom. Dow skids, 3,000%. That's not a skid. When you skid 3,000 points, it's not a skid. Trump plans injector. Wish I had it. Should be a little more prepared, so apologies for that. So yeah, so I know that the airlines have been trying to get some funding there, some bailout money. So that's obviously going to affect Boeing. And Boeing, how much is it? $130. That's crazy. It was $440 like a year ago, right before the MAX 737 situation. And that's basically it. Let's look at the S&P because that's going to give us a bigger picture. Looking at individual stocks right now is not really going to tell you much. So the S&P 500, I'm going to look at the future side of it. If the freaking charts work, there we go. And you can see that, yeah, so not very pretty. So I had a target down here. It's still there of the 50% level being somewhere between 2,031 and 2,048. I think Goldman Sachs came out with some, let me put Goldman Sachs and 2000 S&P. I think they put that. So that would add a little bit more, there we go, yeah. So Bloomberg posted that Goldman Sachs may not hit bottom until 2000. So Goldman Sachs agrees with me. That's awesome, right? So yeah, so I posted this, I think it was on Thursday or maybe Wednesday, that this 50% retracement, it's very likely. It looks like it's very likely. Although, slight positive, with all the crap that's been going on, all the bad news, we're respecting that 38.2. And if we are able to bounce off of this, again, I don't want, this is not good news per se, but it's not terrible news. If we're able to just maintain above the 38.2 here, it would be definitely positive, and it would just be. Some people are saying that we're in a recession or whatnot. Um, to me, this would be stock wise, it would be just a healthy retracement from this long ass period. So from 2009, it's been pretty much straight up until like last month. So if we do a 50% retracement from that swing low in 2009 March until swing low 2009 March, swing high 2020. Think about that. That's a crazy amount of time. February, so almost a full 11 years. Is that what it is? A 50% retracement of that would be the, let me see here, the, no, not 1700, the 2000, basically 2000. So Goldman Sachs must have seen me post about this. That's just pretty logical that it would be there. We also have this extension here, this Fibonacci trend extension that kind of correlates that 200% level at 2048, 2030. So yeah, so between 2000 and 2050 looks like it might be the logical point if we break that 38.2. And if we do break it, which we've tested it at least once, right? Yeah, at least once. It's pretty much a straight shot down. I mean, there's some resistance at 20, 22, 21, 2185. But that, I mean, if that does happen, I mean, to me, that would not 2050 would be the logical spot. And what confirms it is 2100, we have the volume profile point of control, that red line here. So we have some confluence in this area here that if it does break the 38.2, I would expect it to hit between 2100 and 2000 to give you that range. Last time I drew this little box here, this gray zone, that's between 2135 and 1975. So that's just a bigger area, just a bigger little target there. But I think 2000, 2100 is likely if we close below the 38.2. So let's dig into the daily, which might give us some more perspective. And technically, this looks terrible. This does not look good at all. If we draw an extension here, really what you want to see is, I mean, this is just, I mean, it's just straight down pretty much. Yeah, it's not looking pretty. I mean, this trend line here is so, it's just not, there's nothing technically healthy about this. But the only saving grace here is that we have rebounded off the three, well, at least support has been found temporarily at the 38.2. And let's hope that that kind of holds true. But yeah, that's a crazy little look there. If we do that, which I've done a couple of times here, but if I just move that extension, so yeah, we hit that ABCD here. So right now we're overextended on the downside. I really do expect to see, we continue having some bad news, which is why, including the VIX around 80 is crazy. But I do, technically, you would expect to have some sort of a, I don't know if you want to call it dead cat bounce or whatever you want to call it, but some sort of a, like a bounce. And we had a brief one here, and then we had more bad news. This was around, February 28th. We had a little bit of a bounce there. It hit it wasn't the 30.2. It hit the 50% level, I believe. And then it bounced way below. So could this be an Elliott wave in progress? Maybe this is wave 1, wave 2, wave 3. So it would be something like this. Let me draw it. So this would be wave. I'm going to change the color to make it a little more. So this is wave 1, wave 2. It's terrible. Wave 2 there. Maybe this is wave 3. And then we would need a retracement up, maybe here, and then down, maybe there, which would give us that 50%. Could be, right? No one knows. I'm not going to say that I know it's going to happen, but it's definitely shaping to look like that. So wave 1, 2, 3. So 1, 2, 3. Wait, did I draw that? 1, 2, 3, 4, 5. Yeah. So if that was the case, let's draw a Fibonacci retracement and see where potentially that will give us. So a 38.2 would actually be up at 2,647. So this peak I would expect to hit there, maybe even a little bit higher. So between the 38.2 and the 61.8. So 2,647 to 2831. That would be the dead cat bounce, if it does happen, and then an extension that would come down to probably maybe even this region here. I mean, that would be a pretty far shot. Usually wave 3 is the longest of the legs in an Elliott wave, but you never know. I don't want to pretend to know what's going on here. Any kind of super crappy news, and as soon as we break this 38.2, there's just very little support until the 50% level. So that might just happen. Don't want to see it happen, but it's a possibility. I think most likely what would happen is if this is an Elliott wave, I think that this is very likely the case. A touch of that horizontal, which is at 38.2, and then down here. It's a terrible drawing. Let me try to draw that again. So there, and then boom, there. We'll see. We'll see. So I guess if you do believe in Elliott wave and that whole theory, which, I mean, you have to just, it plays out more often than not, in my opinion, from what I've seen. You'd want to maybe use this 38.2 bounce as a low and then go long to maybe the 38.2, or maybe just wait and short when it gets to the 38.2, which kind of makes more sense because since we're on a downtrend, it's not usually the wisest thing to go against the market. So just putting it out there, consult your financial advisor before making any decisions or trading. And yeah, as far as up targets, really it's this horizontal 2,647, 2,650 basically. Downside, if we break that 30.2, I just don't see much resistance going down all the way down there to 2,100, 2,000. Most likely it's 2,150 area. Yeah, it's just nothing's looking too hot right now. Wish I had better news. Let's take a look at maybe Tesla. Tesla's always fun to look at because it's like the crypto of stocks. So yeah, it's also suffering quite a bit there. So if we draw an ABCD from this level here, and then and extend it over. Yeah, we did meet the which actually was about a resistance here, so that would have been a nice little target had you had one there. So this ABCD was met. It actually bounced off the 200 exponential, the 200 EMA, and yeah, that's the only support. Well, there's another horizontal here. So right now, it kind of like playing between this area between 436 and 493, 500. If it breaks below that, there might be a little bit of 400, but I think it's a straight shot all the way down to 360. Yeah, it's just every stock is going to be mirroring the S&P 500. I mean, it's just That's why when things like this happen, I like to look at the S&P and trade it. So let's look at the last thing. Let's look at Bitcoin. It's always fun to see that. Let's look at Bitstamp. And holy crap, what the hell do I have here? I don't know. Let's clear these charts. Start from scratch. So we see that actually it's kind of interesting if we do a weekly, let's see. This weekly, the volume profile weekly says it's 400. The point of control, that would be so crazy. But hey, you never know. You never know if there's, I don't want to even put it out there, but anything is possible. Really, the true bottom for Bitcoin, just like with any commodity, would be the cost of production. So a miner would be able to tell you that. Some people are saying it's somewhere between 2,500, 3,000. Some people say it's a little bit higher, especially with the halving coming up. Whatever the true cost of production is, whoever has the lowest cost of production is going to be able to give us a bottom. That's the end of it. So if there's some country that's subsidizing electricity, providing free electricity for miners, then it's basically going to go pretty low because all their expenses are going to be just on the miner, on the actual hardware. And they have to pay electrical. Then even if you're paying 5 cents or something like that per kilowatt hour, you're still going to be, it's still going to be pretty cheap, but I don't think it's going to be $400 cheap per Bitcoin. So let me see if I can draw some horizontals here. So we are currently, let's say that's, well, yeah, somewhere between these little sections. Makes sense. So without going too high on the targets, I don't want to go, I guess we can just draw this one just to understand where we are. So let me draw these little boxes, these little order zones, whatever you want to call them. So let's make that a different color. Let's make it maybe blue. Let's make it white. And give or take 50%. Okay. So we have these little sections that I think are like, well, I mean, this will be pretty bad if it gets down here. But okay, that makes the lines a little clearer to see, at least not so so convoluted there. So I am on a weekly, so that gives us a bigger picture. So yeah, it just doesn't look good. Ever since we broke market structure here once, then we try to go above it, but we kind of broke above it, but it's still market structure fail there. So we had double market structure fails. We had market structure fail, maybe triple. There, fail. Maybe I should change that to a red. Make it a little clearer. So we had a fail there of market structure. Then we had another fail there. We tried to break above, but then when we broke below here, give or take, even if we do it down here, it doesn't really matter. I would say there, it's more accurate. So we had 3 market structure fails. And then this major freaking red candle of death that happened, I think it was on the 9th, is it? Yeah, this is on the weekly, so a couple of days ago, last week. It's not painting a very pretty picture. So we are sitting above this horizontal here. So where can we expect to see things? Let me open up to see RSI. So we don't have any bullish divergence that I can see. I don't have any not even like sort of good news. um, I guess if we're able to kind of curl up here, but I just don't see it, to be honest with you. If we have more continued bad news, then we're most likely going to go down to, for sure, retest these lows. Um, I think today we were down here, as a matter of fact. So 44.50. But I have a feeling we're going to go somewhere between basically 4,200 and 3,800, which actually 3,600, 3,700, I think would be the next zone that we're going to visit. I don't want it to happen, but it looks like that might be scenario. I think we're going to test those lows, and we have to see. So the point of control is actually pointing at 37.94, so 3,800. So in this little section here, let me draw that out. So it's, yeah, it doesn't look much better than that, to be honest with you. If we do break below that, then a test of these lows in December 2018, which is 31.93, give or take 31.60, give or take. There was a little tail there that went to 31.17 or so. Let me see, 31.22. Could go that low. The scary part is if it does go that low, then you know, who knows how low it could go. So I guess at this point, I don't know if the miners would be the one holding off. I would assume that the miners would be the ones that kind of would take the reins, but it's hard because miners, they need to sell their Bitcoin to pay for their expenses. I mean, that's their job, right? Their job is to mine Bitcoin, just like gold miners mine gold, not to hoard it, but to sell it for profit. So it becomes this battle of how long can these miners hold on to their Bitcoin and try to push the price up. I don't know what the answer is. I really don't know. So we just have to see. We have to see how this all plays out. If we do, we got to take it level by level. So let's first see if we can maintain ourselves above this 4,900 range, or 5,000 ideally. Then I think that's pretty good, and that would give us, you know what we could do? Let me try to draw a trend line here. It kind of gives us a better idea. So yeah, if we can stay above this trend line, that would be ideally that would be the best case scenario. So long term buying below this line, if you're able to buy here, not financial advice, but if you've discussed with a professional and yada yada yada, anything below this line to me makes sense for long term holdings. Especially because I think we can extend this down here. Yeah. So you can see that this trend line has held true since July 2017. We just broke below it. So we're at a critical time here with Bitcoin. Let me go into the daily here. We're at a critical time here because we've had wicks down but not closes. We actually did have, we're on our way to the third close. So we had one close. Actually, no, this would be our second close because we had one close and we had one immediate open there and then a rally back up. So we actually closed above this trend line. So we had just one close and then closes above it. So that trend line has actually acted as resistance, support, I'm sorry. Today, now currently, we still have 2.5 hours to go in the day. But if we close below this, it's not what you want to see. So this trend line here is what I would consider to be the leading kind of, not the leading indicator, but it's kind of the our barometer, it's our guide. If we start having closes below it and then have that act as resistance, that's not good. Unless we have some really good news, coronavirus is overcome, oil wars are out of the way, that kind of thing will drive this whole thing up. But with no good news or continued bad news, and I'm looking at this this little area here of 40, basically 5,000 and 4,500, and then straight down to 4,100 to 3,700. And if it breaks below that, then yeah, I don't want to think about that. I almost want to, let me see, why did I draw that there? Yeah. I mean, there's also this 3,300 level, but I think that if it does break below this 3,700, most likely it's a straight shot down to 3,000, 3,100. So, or 3,200, I should say. We'll see. We'll see what happens, but yeah, things aren't looking too hot here. So let's hope that Bitcoin is able to hold on. Hopefully, the S&P 500 is able to use that 38.2 retracement as support and bounce off of that. And we're way below these the 50 and the 200 EMA. So we'll see. We'll see. It's crazy markets, crazy times, history in the making. So that is basically all that I have for today. And if you have any questions, please let me know. Post a comment. I try to answer those comments as best that I can. I've noticed that that the YouTube app doesn't really inform me of comments very well. So, so I'll get to it for sure. But I might be a little bit late on it. And like the video if you found any value. Subscribe to the channel if you want to continue seeing some more. And post this, share this, and hopefully some people will find value from it. Thank you so much. Have a great week. Don't get wrecked, and don't get stressed out either. I mean, I know that money's at play here, and I know a lot of people have put a lot of money, and a lot of money has seemingly vanished. But at the end of the day, I know it's easier said than done, but it's just money. It's frustrating to lose money and whatnot, but don't go to the dark side. Don't, there's a lot of communities out there that are helping traders during these difficult times, and because it can really mentally take a little bit out of anyone, really. But at the end of the day, just understand that you should not be putting more money than you can afford to lose, and that's the reality. At the end of the day, you never know what's going to happen, so it's better to be prepared and just put enough money. It's a risk, so you have to put enough money that if the unlikely situation where stuff hits the fan, that you're able to be covered, that you're able to be okay, and like, look, hey, it sucked that it happened, but life goes on. And with that, that's it for today. Again, like, subscribe, and share, and I'll see you on the next one. Bye-bye.